The daily intraday review is proudly brought to you by our visual trade journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop right on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com. Hello, this is the price action for yesterday, EURUSD 3-minute chart, and it was a broad bear channel. Let's jump into the 15-minute to see how this formed. So as you can see, we drew in our channel yesterday. So we noticed, if we go all the way back to last week, I guess, we had this overshoot of a downtrend, a very broad, rangy type of channel. And we've had this huge overshoot, and we've come down and we've started to create a new channel, and we've broken out of that channel. So by this stage, once you've got that other touchdown here, you're probably looking to draw in your bigger channel. So always be looking to draw in the bigger channel. So, you know, taking the highs and the lows, this looks like it's a break of the channel, and then it's come down and it's retested it a couple of times. So last night, the start of the London Open was here. So we had that triple test again, but we also had all this resistance from this channel here. So the first entry, second entry short is the better entry, and we had these two very strong legs. So after you get that strong of a bearish move where there's gaps forming between the bars, and you get that pullback, there's a little bit of an overshoot there that causes the pullback. You know, we're looking to touch the bottom of this channel. We hit that and we create a little range there. So when you're looking at this before the start of the night and you see those three things happening, you really are looking to go short. You know, we know we've got multiple resistance. It really is, trading really is support and resistance. Once you can see it and understand where most of it is, the probabilities, you know, go in your favor. So we'll go back here and we'll take a look here. So on the lower time frame, on our 3-minute, we can just see that we had the triple test. The first trade of the night, I think, triggered just before the open. So this is bar 0. Bar 1 is here. So taking that for a scalp is not a bad trade. I mean, we've had the triple test. We're expecting the 2 legs back. We've had 1 leg down, pull back. We're looking for that second leg. That is a very bearish bar. It's a reversal signal bar. It goes bigger than this bar on this side, and it's lower, closes lower, closes on slow. So taking for a scalp is not a bad trade. You're not looking for a massive swing down at the moment. You're just looking for that second leg there. Then we pull back and we get this stuff happening here. So it is hard to enter here. You wouldn't take the first entry down because look how strong those bull bars are, and there's a massive gap below there. If you can see the green box there, there's a gap between that tail and that these bull bars are closing really strongly. So you wouldn't take that one. This one is not a bad entry. I mean, it is a second entry down. It is a bearish bar. Like if you've got a limit order, you'd have to drop it in. But if you get filled and you get scared from this bar, just exit. just take the loss. But anyway, it fails. It actually fails with in that range. It fails with like a failed breakout. So we are expecting another 2 legs back. And once you fail there, the second entry down here is the better entry. So you've hit along this support like 3 times. You've had, you know, the triple test up here. There's multiple resistance going on. You've even got resistance here that's failed. You're probably heading down, and your target would be the bottom of this channel. So we're now just looking for this channel. So you'll be drawing in your channel lines, and then, you know, taking this second entry down is not a bad trade. But remember, you've got to exit at the lows. So don't be thinking, or if you think this is going to channel the whole way down, you can just hold the whole night till you get down to a part where you're uncomfortable. Maybe in here you exit. But the point being is, once you've had those 3 attempts or even 4 attempts up, the channel's holding. There's a very high probability you're heading down. When we head down, we then overshoot again along this micro channel. You can see it's a very strong bear bar. It overshoots and it creates this another rangy pocket. And you do get a first attempt up and a second attempt up. Once you start to get like 2 bull bars in a row, strong rejection and things, you're probably heading back up to at least the EMA, a couple of legs back. So you can jump on there and take a scalp. And then once you start hitting the resistance again of this channel, so by that time you'll know your channel is this wide because of that bar there. You can look for that. You can either take the failure on the third push there, or you can wait for the lower high there and you'd enter and you just ride it all the way down. You've also got another opportunity to jump in here on this overshoot here. It creates a little range. After the first pullback, there's 3 or 4 bull bars, bear bars in a row. They're all pretty much closing on their lows. Taking this trade is not a bad trade. Holding it to the end, but now you've had your 3 touches. You've also had an overshoot. Sometimes overshoots will just the channel will continue down. It doesn't happen as often, but you can overshoot and just get the pullback and continue down, and that's what happened in this case. Then inside this range, you wouldn't want to be touching really anything until you get back to sort of the EMA and this channel line here. You may come down and create that double bottom before heading up. So the only place you'll probably look is when it ticks back above the EMA, maybe entering here. I did take that trade, but remember you can only take down to the lows that you see to your left. So you're just looking for a scalp. Anyway, that was it. That's the trades for the day.